Morning traders, Paul here with GammaEdge. Today is Tuesday, the 8th of November, Election Day. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today, new long signal on our short-term cumulative tick model. The intermediate termed timer is off. The long-term timer is still in cash or short, depending on your perspective, but it is improving to the long side. We're right at thresholds. Of course, these are paper trades only. Nothing here is a recommendation to buy or sell any security. Positive GEX, which is the right goalpost, remains up at 4,100 in the SPX. Has not moved. It's been there for a while. There are some levels you'll see in one of the last slides that could contend with that. Minus GEX has shifted up from 3,500 to 3,600. We discussed this as a possibility yesterday. It's because the 35 and the 36 lines were very, very close. Worthy of note that we are at the top of transition in the SPX AM settled, and the SPX PM settled instruments. When all of these lay on top of each other, that's really constructive. We are in a natural launching point to the upside. For those of you familiar with the GammaEdge different levels, this is we are right at plus trans, plus or minus a strike or two. So that usually is a very good area to launch north. The JPM December quarterly short calls at 38.35, they remain in play. But note the moneyness balance areas are now above that. They did transition up yesterday, which means calls have been added to the upside and puts potentially have been closed. JPM is not liquid, so this line, if it is absorbed, will open the door for 38.30 and 38.55 to the upside. So just keep that in mind, and we are looking to those areas as possible short-term targets. Taking a look at the cumulative tick, day one of the new short-term signal here, if we actually get the crossing of the short-term moving averages, building into what we call a railroad track up pattern. It's a very strong pattern. I would seriously be considering a trial balloon on your paper traded long accounts. Think about that. End of day evaluation, we're still negative on the ribbon, which means we are still in this cash or short-term position, but if we get a continuation upward, that will negate that and start turning that model up, much like what we had back here. Intermediate term timer is off with the bolded cumulative tick inside of the ribbon. It's directionless, and so there is no signal. So we're very early. Day one of a short-term new move. We pulled back, and now we have a potential to go up, or we could fail downward. We don't know. Your crystal ball is as good as ours. Taking a look here at some key levels, 4,100 still is the right goalpost. Left goalpost has moved upward from 3,500 to 36. I am starting to see some positive deltas appear across the board. That is constructive to the upside. We want to see more green in terms of the deltas and go north. When we take a look at the overall weekly, a couple things stick out. This is the SPX PM settled, so weeklies or the dailies. First of all, 3,900 is growing. Of course, there's this 38.50, 38.40. It grew quite a bit from yesterday. Here is one of the transition balance points above 38.30. So as we go above, we think pressure to monetize increases. So we want to watch that. Here's that JPM December quarterly at 38.35. This is a very strong level, being somewhat offset by long calls, but nevertheless 44,500 short calls sitting there, and we'll just have to wait and see what happens with that. The gold line is our current price at 38.06. It picks the closest strike, excuse me, and you can see that we're near the top of the transition range, which is a good place to be. 3,700 remains the short-term downside protection level, and we don't anticipate going in that direction. The 0 DTE is very strong, and we don't normally see this on a Tuesday, possibly election day, possibly some things going on there. When we have such a strong positive or call-dominated type of gamma structure, that could put downward pressure on the markets, and it's worth noting that. 3840 is that upper line in the sand, as you can see here. Again, we're sitting right at transition, so as long as we remain above the 3780 level in this range, certainly no lower than the 3750, I think we're safe and I think we're fine. If we do push northward, I don't anticipate any more contribution above 3840 from the 0 DTE. Note the green structure in the delta notionals below us. That is supportive. That's a call-dominated environment. And coming off today, you can see that we are losing both calls and puts to the upside. When we lose puts, that is constructive. So I am kind of happy to see a lot of red vaporizing today. Taking a look at the 1 DTE, so this is where we end at the end of today. This is our crystal ball forward-looking projection. Of course, our crystal ball is as good as yours. You can see, again, at the top of transition for today, we have no clue, nor do you, if we're going to go up to 38.55, but that is a major dominant line at the end of today. You can see where that sits, and that'll be the starting point for tomorrow's discussion. 37.50 to the downside, and it's worth noting that I wouldn't be surprised if playing in this area. Don't think we're going to go much lower than what you see here at the 37.50. Taking a look at the combo complex, which is the combination of the AM and the PM settled SPX, which is really everything. You can see that 37.95 and below, very, very strong call-dominated delta support. That's really cool. To the upside, it's going to be very difficult to make progress above that 38.45 area. You can just see we're still put dominated. We need a lot more calls, short-term calls, to go in here. We're already seeing the gamma positive in that area. Now we need to see the delta start flipping in that area. Remember, moneyness impacts this, right? So we definitely want to see more and more of this turn green, much like what we're seeing here, and we're not yet seeing it, but nevertheless pay attention to it. One of the transition points or balance points for us today is 38.56, right in this particular area. Here's that JPM strike. Overall, I think we're in really good shape to continue and advance upward. The JPM is not liquid, as I said earlier, and because of that, it'll get absorbed in time as more and more calls go in and or puts get closed out. Note though that the puts that are being closed here, there's not a lot of them there, right? So in general, this is going to have to get absorbed by long calls, not necessarily closing of short puts, or closing of puts, excuse me. So the key takeaway here is that we want to see more and more calls up here, which will allow us to transition up, and we've seen that in the past, and can be pretty lucrative once this becomes a nothing muffin. Taking a look at the delta moneyness, we're continuing our upward march. Yesterday this was green, today we're green. Here are the balance points for the SPY. Excuse me. And I think the key takeaways here are these key levels that you're seeing here at 376, 377 area, as well as the lower range of 376, 377, and the higher range of 383, 384 areas. So pay attention to those as we continue to advance upward. Taking a look at the delta moneyness for the SPX, we are seeing a little bit of pressure here in the 3700, fairly significant magnitude coming off today. But what's even more important is what's coming off here in the 0 DTE. On the put side of the equation, fairly significant magnitudes, and we want to pay attention to that. We do think that the battle between these two actually puts the 0 DTE OTM puts on the battlefront and makes them win, and I want everybody to think through what the dealer response is as these are either monetized or as they fade into 0 delta towards the end of the day. Finally, SPX Structure, 4100 here, 36 down here, up from 35. You can see the relative magnitudes. Look at the relative magnitudes that we're seeing right here, though. I want everyone to pay attention to this. We do think this is material. It's worth paying, some visualizations to. This is the 3900 line. That could be a short-term upside target. So 3900 sitting right here. 4100 remains in play. So we could actually see a bouncing here down to that 39. Which would be a short-term top and then perhaps a pull backwards. We'll just have to see where we are. We are at the upper range of the transition, getting very clean, very clear here on the transition. When that occurs, typically there's a run north, but here's that JPM line, and again, to beat a dead horse, that is not a liquid number. But it exists, and delta hedging has to occur, and it's a pressure on the overall market. Those short calls have a delta associated with them, and that will be a wind that constantly blows from now to the end of December. So with that, I will leave you. If you have any questions, comments, suggestions for improvement, follow us here at Twitter with GammaEdges with an S. Join us at GammaEdge.us. Click on the pricing tab, fill out the blanks, come on into the Discord. We have all the tools turned on, 14-day free trial, no risk to you. Great group of traders. Come on in, learn what this is all about. Here on YouTube, of course, if you have immediate feedback from me, smash that like button today, and that'll let me know that you liked what I'm providing, and I'll continue to do so. And then, of course, follow us, because as you follow us, and you will get notified as we post new videos. We post usually 2 a day, and so I would urge everyone to watch those and learn how we're applying this thing called Gamma to our trading. So with that, I bid you farewell. Make it a great Tuesday. Make sure you vote one way or the other. I don't care which direction you vote, but go vote. People die protecting the country, and you're right to vote. So I'll leave it at that, and we'll go from there. Thanks, everyone.